Right. We are recording. All right. So, good evening, everyone. My name is Chris Price. I am the host of the Wealth Mindset and Real Estate Investing Meetup. I'm also the CEO and co-founder of Red Fox Multifamily, and I want to thank everyone for taking the time out this evening for a great uh, jam-packed event tonight with a great speaker that we have, who I'll introduce in just a moment. But before I get to that, let me cover a couple of commercial notes here. So first and foremost, let me tell you a little bit about us. So the Wealth Mindset and Real Estate Investing Meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professional and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate, which you're going to hear a lot about today, as well as other proven ways to build wealth through real estate and through passive investments. Now, we're sponsored by Red Fox Multifamily, who works with investors who are dissatisfied with the low returns from savings accounts and bonds, and investors who are concerned about the volatility of the stock market. Red Fox Multifamily puts discerning investors' capital to work for them by investing in exceptional multifamily properties in the best markets nationwide. Demand for multifamily rental units continues to grow and is driven by both the preference of certain demographics as well as unaffordable single-family home ownership options. Red Fox Multifamily, based in White Plains, New York, partners with investors for whom the stability of real estate investments appeals, but the stress of property ownership does not. We give our investors the benefit of real estate investment through syndication, which is a group investment in multifamily property. So thank you for the brief commercial break there, and just a couple of other administrative things to get on with here that I want to relay to the team, and that is, if you're not speaking, please mute your lines when as we're here, so we don't disrupt our guest speaker. Hold your questions to the end unless the speaker invites you to ask your questions while they're presenting. This presentation is being recorded, and please note that this material does not constitute an offer or a solicitation to purchase securities. This is just purely information only and should not be construed as business, financial, or legal advice. And you should always consult your CPA, attorney, or other professionals about before making any real estate investment. So finally, if you're interested, we're of course going to talk in a moment about our speaker. But if you're interested in talking more about wealth mindset and real estate investing, you can scan this QR code, or you can email me at chris@redfoxmultifamily.com. So without further, let me go ahead and introduce or review our agenda really quickly here. Let me make sure I admit everyone. All right. And so today we're going to, we get these things and we try to control it, but we were unable to that time. So that's my mistake. But let me go ahead and just share here for a moment. I'll monitor this a little closer to make sure that we do not allow that to happen anymore. So what we're going to do a brief speaker introduction in the speaker presentation, and then we'll have a Q&A at the end, and we will do some virtual networking for those who want to chat, learn a little bit more about our speaker or with others that are here for the evening. So thank you very much for that. So let me introduce our speaker. So before I get into this, I had the pleasure and privilege of meeting Aaron Katz, our speaker for tonight, at an awesome multifamily real estate event back this spring. In May of this year at Brad Sumrock's Rat Race to Retirement event out in Texas, in right in the Dallas area, Addison area. And the event was awesome, but there was a breakout session for the VIP attendees that were there. And I was having lunch, and this man that you see on the screen here was sitting down, and just we struck up a conversation, and we had a great dialogue, and there was just a great connection there right away. And I then, for me, Aaron didn't know this until I, told him when I saw that. I of course was familiar with Aaron, and being someone who's been studying multifamily for a few years, I had seen the work that he's been doing, and heard about the work that he was doing, and the fact that he came out of nowhere just to say hello, and have lunch, and chat with me was just an awesome experience. And so I was just so grateful that he took the time to do that. And then he was also very generous in sharing his business card with me, and his information, and said, hey, let's keep in touch, and if there's ever anything that you're interested in, if whether it's partnering in some ways on multifamily or anything along those lines in certain markets, let's have a chat. And I was just delighted to hear that. And fast forward here throughout the course of the summer and the fall, we had an opportunity to connect or reconnect again. And I was able to ask, Aaron was, generous enough to, again, grant his time to be able to share with us this evening his expertise on multifamily investing. So I'm going to introduce Aaron, but I just want to say thank you again to Aaron for his generosity and his time and sharing his expertise with all of us tonight. So let me get to it. So Aaron Katz is a successful multifamily syndicator with over 10 plus years of apartment investing experience. As a successful investor, Aaron has amassed a portfolio of more than 2,200 units as a general partner, and more than 6,000 units as both a GP and a limited partner, or LP. 8 of Aaron's 13 GP deals have gone full cycle, which I know Aaron will talk about what that means as we go through the presentation, as have several of his passive LP investments. Aaron currently partners with investors as multifamily deal sponsor or general partner and key principal investor. When Aaron isn't sponsoring real estate deals, Aaron enjoys spending time with his family and friends, as well as music, sports, and a whole host of other things. And if you don't follow Aaron on social media, especially on Facebook, I would encourage you to do that. I mean, his adventures are pretty awesome, and I know he's going to share a little bit about that this evening as well. So Aaron lives in Plano, Texas, with his beautiful wife, Maria. So without further ado, let me introduce to you all Aaron Katz from Aaron Katz Multifamily, and he's going to talk to us this evening about how to build wealth and create financial comfort, security, and freedom by investing in apartments. So Aaron, I'll stop my presentation and turn it over to you.
Awesome. Thanks, Chris. Appreciate it. And likewise, I actually at that event, I remember Chris stood up at some point and had an interaction with Brad Sumrock, my mentor, who was up on the stage, and just Chris's demeanor, the way he presented himself. A lot of people come, they're kind of new to multifamily, getting plugged in, really getting started. And this guy, just future success, just jumped off the guy. And I said, I got to go introduce myself to this guy and get aligned with him, because you never know what can happen down the road. And that's really the way this relationship business is built, is just meeting people and finding out who you jive and connect with. So the feeling's mutual. Chris, thanks. It's 9 full cycle deals after I closed one last Friday, after I sent you that information. And I'm actually going to go through some real world numbers and talk about actual returns on all of my 9 full cycle deals. And yeah, like Chris said, at the end of the event, feel free to find me on Facebook. I would just ask that if you do, please send me a private message letting me know that you saw me on this event, so that get a lot of friend requests, and Facebook limits it at 5,000. So if you tell me you saw me on Chris Price's event, then I'll be sure to accept your friend request. But thank you very much, Chris. I've laid out a presentation here tonight. I'm going to let you know what I'm going to talk about. First, I'm just going to tell you a little bit about my personal history, who I am as a human being, how I came to multifamily investing back in 2011. And then I'm going to run through a high level. I don't know the experience level of everybody on the call, but I'm going to assume and cater probably more to the beginner that is just learning about multifamily investing and how they can get in and how they can do what I've done, which is, as the event is titled, how to build wealth and create financial comfort, security, and freedom by investing in apartment. So I'm going to go ahead and hit some of the high level benefits of apartment investing, why it is that I chose apartment investing as the vehicle. Might be surprising to many of you, but I didn't grow up dreaming that I was going to own apartment buildings. You know, people want to be a fireman. I might have wanted to be a rock star. But at some point, I saw that apartment investing was going to allow me to build wealth. And it was at the same time as I was building wealth, the way the business is set up and leverages systems and teams, other people's time and other people's money, it was going to allow me to lead the life that I wanted to live, creating the memories that I want to make, the experiences I want to have with family, friends, and loved ones while I was doing it, not 30, 40 years down the road when I was probably going to be too old to enjoy it. So I'm able to do that while I'm able to enjoy life while I'm building wealth through real estate investing. And as I'm doing that, I'm also doing it for my passive investors. And we're going to talk about that as well, because there will be an opportunity for all of you that are watching now. And I'm going to talk about real world returns on my full cycle deals to my passive investors. You're going to have an opportunity to get on my database where you will have the ability to review deals that I have, opportunities, and consider passively investing and make a decision if you want to choose to invest with me in those projects. And you'll see very quickly when I hit the real world numbers how you can build wealth and create financial comfort, security, and freedom by investing in apartments, even just passively with deal sponsors that have projects and a track record. So, then I will circle back after I hit the high level benefits of multifamily investing, and I'll give you some of those real world returns on my 9 full cycle deals. And then I think we're going to open it up to some Q&A, and then I'll let Chris take over, and we'll go from there. And I know we're going to be respectful of everybody's time, because I think the event is supposed to be 1 hour. And that would be 8:30 for all of you on the East Coast and 7:30 Central for me in Texas. And my Dallas Stars are kicking off our NHL season tonight on ESPN Plus at 7:30. So I'm going to sign off from here, and I'm going to go watch, hopefully, my hockey team win our season opener tonight. So without further ado, then, I am a hockey fan because I grew up on the East Coast, like many of you, even though I live in Texas now. I was born in Silver Spring, Maryland, in the Washington, D.C. area. I went to high school in Northern Virginia, Fairfax, Virginia. I'm sure many of you on the East Coast are familiar with those areas. They're all very close and just outside of Washington, D.C. I'm a first generation American on both sides. My father is Russian. My mother is British. And they met in the Georgetown area of Washington in an old bar called the Rocket Room back in like 1966. Got married in 1968, and I came along in 1971. My father, I don't come from wealth or money on either side of my family. My father was working 7 days a week when I was young, and somewhere along the way decided that he was going to be an entrepreneur and he wanted to be a businessman, probably because he decided he knew he'd have to work hard to get there, but he realized that ultimately he didn't want to work 7 days a week for the rest of his life, and he had to find a different way. So I think he figured, I'm going to so he had some businesses that he tried to get off the ground. He had several. And I remember, because I would spend time with him, because my parents divorced when I was 5. And then my dad would have me on the weekends, but because he worked 7 days a week, I would often be with him in the store. So he had a carpet business that he tried to get off the ground called Carpet Carnival. It didn't make it, but all of the businesses he had were really cool because they were all fun things for like a 5 or 6 year old kid to like roll around in the back on, because he was in the carpet business, and anybody knows carpets are rolled. So there was just hundreds of rolled carpets, and I'd be able to just roll around in the back. And he even says that I was trying my hand at sales very early and talking to the customers and trying to close sales with the customers at 5 and 6 years old. Then later, he eventually did find success in the mattress business. Also a fun thing for a kid to jump around and jump on in the back of stores. So I grew up in and around the mattress business. My dad started a company called Mattress Discounters, which some of you might have heard of because it ended up growing quite big throughout the East Coast, from the first initial 2 stores in Maryland in 1977, and was even up in the New York metro area, and then went nationwide. Eventually sold out. My dad is not in the mattress business anymore. But so I grew up in the mattress business. In fact, I did every job that you could do, working in stock rooms, tying mattresses on cars throughout high school, doing accounting in the office during the summer. Being an immigrant, my dad wanted to instill a strong work ethic within me, and was going to make sure that I understood the value of hard work. And very early on, at 19 years old, I was on a hard commission sales floor. And when I say hard commission, no base salary. I was working with these old warhorse, hardcore sales dudes. And if you didn't sell, you didn't make. There was no base salary. So you sold something, you got a spiff, right? You got a commission. So that's how I learned sales very early on, and then ended up into getting into management. And then when I was 22, I had saved up quite a bit of money. I had 2 roommates, and I was making really good money for a kid my age, working on those hardcore commission sales floors. And I started talking with several partners, and we decided, well, let's just take the mattress industry, the mattress store concept, not reinvent the wheel, and take it to another market. And that's exactly what we did. And that's what brought me down to Texas. Came down to Texas in the 90s, launched a company called Mattress Giant that we grew to 60 stores and eventually sold in the late 90s. For about the next 10 years, I was involved in a couple of different businesses, also got involved in residential real estate. I moved to California for a couple of years in those years, but essentially, other than those 2 years in California, I've been in the Dallas, Texas area from 1995 until today, 27 years later. So 25 of the last 27 years here in the Dallas area. And it was around 2009. I was coming off of a business. It was a children's furniture business, and it had just not turned the corner. And eventually, some of you, everybody that achieves success, in any area of business is going to have some great success stories. But if anybody's being honest, not everything you try is going to be successful. So unfortunately, this children's furniture business just didn't turn the corner, and I was throwing money at it, trying to get it going, and it just didn't happen. So eventually just cut my losses and really kind of needed to figure out what's going to be, the next avenue for me. And I'm a voracious reader, and I had always read about real estate. Never owned any investment property, had owned several of my own homes, but never owned a single rental home. Still haven't owned a single rental home to this day. A lot of people move into the multifamily business, and I meet them all the time that own a lot of single family rentals, which is great. And many of them then learn about multifamily, and they decide to liquidate and sell their single family homes and move it into multifamily. Many of them still keep their single family homes, but then they see the value in doing multifamily as well. And we're going to talk about why shortly, that they see the value in moving into multifamily. But I had read for a long time about real estate, and I thought, this is the time. I still have some money to get started, and I'm going to find a mentor. I'm going to find somebody that's done successfully in this field what I want to achieve, and it's going to cut my learning curve. And I did find that guy, and it was the gentleman that Chris mentioned that we met at his event back earlier in the year, Brad Sumrock. I met Brad back in 2011. Some of you might be familiar with him. He has a successful mentoring and education program, one of the top ones in the country. There's obviously others. I know Chris is a member of a different mentoring and education group. There's some really great ones out there. And I've just been, peripherally involved with Brad and his program for a long time, and also now his mastermind program as well. So I knew that I had a skill set that would translate well to apartment investing, because at the end of the day, business is business. It's income minus expenses is profit. And it was just learning the industry specific knowledge that I needed to. So I wanted to learn from someone that had done it successfully, that was going to shorten my learning curve. And I also wanted to do it right. I didn't want to throw money at another business. Like I had this children's furniture business that had not turned the corner like some of my other successful endeavors. So got involved with Brad back in 2011. I did my first syndication deal in 2012. That was in July of 2012. So I've been sponsoring or GPing, whatever term you want to interchangeably use, multifamily apartment investing projects for the last 10 plus years. I've also, I'm a big believer in apartment investing. So not only do I do my own projects where LPs or passive investors invest with me and entrust their money with me, but I'm bullish about multifamily, so much so that I invest in a lot of my friends and other sponsors deals, because I see the value not just in being a sponsor, but believe in apartment investing passively, just like I would ask any of my passive investors to do in my project. So I invest in other people's projects as well. So since that first project, which was a 90-unit property in Arlington, Texas, all of my full cycle deals that I'm going to talk about, by the way, have been here in the Dallas-Fort Worth area. Many of you might know Dallas-Fort Worth is one of the top apartment investing markets in the country for several reasons, but I can hit a few. Landlord and business friendly, job growth, population growth, economic growth. It just has a lot of the factors that we look for that make a market a favorable market for multifamily investing. And I built a lot of relationships here. For 2 years, when I first got started, I did my first 2 syndication deals. Brad Sumrock offered me the opportunity to work alongside of him in buyer brokerage with the students in his program. So I basically, it was going to be a means to an end for me to get more experience by putting my feet on a lot of properties that students in his program were going to look at. So while I was looking to acquire my own properties, I was also working in buyer brokerage with Brad for a couple of years, helping his students get their properties. So I got to see a lot more underwriting on deals. I got to have a lot of relationships with the sellers, with the top brokers in the Dallas-Fort Worth market. So I used it as a means to an end to grow my experience and to grow my relationships. So that brings us to 2015. And then that got to be kind of a time consuming. It got to be more of a job than I wanted. And I really wanted to put my focus back on just being a GP and creating great apartment investing projects for other people that I would be a GP on. So in 2015, I left that post with Brad, but remained in his program. And since then, I've just been moving quick. And I'll circle back to some of my deals and a little bit more, but all told, Chris said 13 projects, 2,200. Well, with the one that's under contract now, it's going to be about 2,500 units very soon, and over 6,000 apartment units total between deals on the GPN and I'm an LPN. Before I circle back, though, to some of the real world numbers with my full cycle deals, because I think the real world numbers are what people want to hear, right? I'm going to give you how these deals actually performed, and I'm going to give you the ones that have gone through acquisition all the way through ownership and then to a sale on the back end. So we're able to look at real world numbers from those deals and see how they performed. Before we do that, though, because I think many of you might be new to apartment investing. You hear me, Chris? Is everything good? I just want to stop and check in. Okay, great. Benefits of apartment investing. I'm just going to give you 5 that I want to walk through that I think are really important, and why, if I was a potential passive investor, you're looking at conventional investments, right? stocks, bonds, et cetera. Chris was talking a little bit about some of those in his intro and just how multifamily can be another alternative. And you're going to hear why, because very much more often than not, these types of investments significantly outperform those investments. And I think there's other factors that we're going to talk about, some of them that make them much more favorable as well. And I'll hit on a few of those when I'm giving you some of the benefits of apartment investing. Number one really is the method of valuation. And that's how we're able to increase the value on apartment buildings in such a significantly short period of time by just making a few small moves that increase the income and reduce the expenses, thus increasing the net operating income. And because of a metric, a multiplier called the cap rate, you're able to come in and often just dramatically blow up the value, which you can then realize through a refinance or a sale of these properties. And we'll talk about that when we hit some of my full cycle deals and some of the real world numbers. But let me explain that a little more as best I can. Cap rate's always a little bit of a tricky one to explain, but I'm going to give you a very simple model. Let's just say an apartment business shoots off $300,000 in income. Obviously, income, typically the main thing it's going to come from is rent, but then there's, laundry, pet fees, covered parking. You could go on, but different components that make up the income that comes in from an apartment community. And then I've got somebody at my door. Sorry about that. Never want somebody at your door when I'm on. Hopefully they'll just go away in a minute. Okay. Nobody ever comes to my door, and somebody decides to come to my door when I'm giving a presentation. Anyway, okay, so $300,000 in operating income, and then let's say the property is annually is $200,000 in expenses. So you have $300,000 in income, $200,000 in expenses. That means your annual income from the property, your net operating income, is going to be $100,000. So cap rate basically is determined by whatever is going to be paid, typically looking at properties in that particular submarket for a property that shoots off an income stream annually of $100,000. So let's just say that the market is willing to pay $2 million for a property that shoots off an annual income stream of $100,000. You would divide that, and then you would get a 5 cap. Does that make sense? $100,000 is going to be 5% of the $2 million that the market is willing to pay for that income stream. So you're going to get a 5 cap. If the market was willing to pay $1 million, you'd have a 10 cap. Okay, so that's about as simple as I can explain it. But whatever the market is willing to pay in a particular submarket for an income stream is typically how you derive cap rate. That's a pretty high level way to explain it. So I talked about the method of valuation and how you can increase the value of the property very quickly. So let me show you how you can increase the value of an apartment community very quickly by $2.4 million in just 1 year. Okay. So if the example I'm going to use, and obviously we don't have a graphic, so everybody can just follow along with me. It's going to be very simple and high level. Let's assume we have a 100-unit apartment community, and that we're able to come in and increase the income and or reduce the expense $100 a month per unit. Okay. Now, some of this can be done by coming in, and often we rehab units or we upgrade the property, and we're able to achieve higher rents because we already see that that's what some of our comparables are doing. I don't ever want to be the first guy on the block to try to prove out a plan. So we look to see what our neighbors are doing and figure, just like the mentor model, somebody that's successful, you do what they've done and you can achieve the results. It's very much the same thing in apartments. If the property next door to you has upgraded a unit to this level and they're being able to command a rent that is that much higher than yours, if you come in and do the same upgrade program, you should be able to achieve the same rents that they're having. So it's very much the same type of model. And then sometimes we're able to reduce expenses because we come in and through more efficient property management, we're able to run the property less expensively than somebody that might have owned the property before that wasn't watching the bottom line of the property as closely. So either way, to assume that you could increase the income from a unit by $100 a month is pretty conservative and not out of line at all. So if you look at that on 100 unit property, that's $100 a month, which is $1,200 a year. You multiply that by 100 units, you're going to have $120,000 in extra income a year. Now, remember how we evaluate the property? Well, I didn't really explain that, but NOI is cap rate over value. So if you have a 5 cap on 120,000 unit property, or $120,000 income divided by a 5 cap gives you $2.4 million, which means by that small change of increasing $100 a month per unit, you are increasing the value of the property in 1 year by $2.4 million. So you can turn around and then refinance that property or sell it and realize that $2.4 million that you have added to the value of that property that quick. I don't really know of too many businesses when you can come in and do that. So again, I didn't grow up dreaming of being an apartment investor, but when I started reading in the late 2000s about apartment investing, I saw, wow, this is really a vehicle that will allow me to build and create wealth in quickly by just coming in and implementing plans and following systems. And because, like I said before, it's built on systems and teams, and we'll get to that when we talk about leverage in a little while, leveraging other people's time and other people's money while you're leveraging those things, and obviously lending loans, because you're getting 70 to 80% loans, sometimes 60 to 80% now, maybe on some of these loans. You're able to use that leverage to and then at the investors obviously get to enjoy all the spoils. We don't have to share that increase of the value with the lender that's putting up 60 to 80% of the money when they're funding the property too. So hopefully you can understand at a high level how we're able to come in and in relative short periods of time through the method of valuation of apartments, increase the value of the property. That's not available, by the way, in single family, not to knock single family, but I think most of you know that single family homes are going to be evaluated by a CMA, a comparative market analysis. And there's really only so much you can do to increase the value of a single family home because you're going to be bound by what's going on in your particular neighborhood. But the valuation approach on multifamily is strictly income driven. So based on how you perform and with the property and the financials, you have the ability to control that increase of value. So I love that. And I think that's just super exciting. That's still one of the main things that just juices me about multifamily. And one of the other benefits is, and the types of projects that I do are called syndications. They're group purchasing. And typically it's one sponsor or GP that I've done many deals where I wore all the hats. I was the sole sponsor on the deals, and I was the only GP in the deals, and I had passive investors. And then more lately, in the last few years, I've done more co-sponsorship arrangements where I'm partnering with other GPs that can share some of the different roles, and we oversee the project together. We basically find the property, contract on the property, put the plan in place, run the due diligence, get the legal documents, and then we take the property out and make the investment opportunity available to passive investors that may want to join us. And then all of us are able to purchase and acquire a large apartment community that none of us would probably have the means to buy on our own. And we pool our money together, we invest in the property, we get a great loan on the property, and then we're able to enjoy the spoils and the returns of a property that none of us would be able to own on our own by the power of these group purchases. So, and I'll talk again as I get into some more of my history with some real world numbers on what that means for passive investors in these projects and what passive investors in my projects have earned. And while we own the property, typically, in addition to increasing the value, as we spoke about, which is going to be unrealized, obviously, until there's some sort of capital event, such as a refinance or a sale. But while we're owning the properties are also spitting off cash flow that we're able to enjoy during the ownership period, not just looking at a gain that's going to come in the future from at some realized event. So typically, I'd say right now you're looking at like a 5 to 10% average annualized cash flow, depending upon the project, is something typical that we're seeing in today's market. And we're ideally looking for about a 90% plus total return over a 5-year projected period. I project my deals on 5-year holds. Doesn't mean we always hold the deal 5 years. We might end up holding it longer. Historically, I've held them for less. My average ownership hold period on my full cycle projects has been 3.5 years, and I'm going to get to that in a minute. So 5 to 10% average annualized cash flow while we own the property, 90% total plus return. That's the cash flow that we enjoy during ownership, plus the gain we're going to see on the back end from the value that we add to the property during ownership. So if a project hits those numbers, we look at that as a good investment. And investors are happy to invest in a project that's projected to, throw off, that return. Now, obviously, anybody sponsoring a multifamily project can put out whatever types of returns they want. So it's very important, I think, to look at the track record and the historical actual returns in past projects for the team members in any particular project, which I'll share with you in a minute. So cash flow and capital gains, benefits of multifamily investing, leverage, other people's time, other people's money. And we talked about financial leverage with a lender. Obviously, we're all leveraging each other. If we're in a group purchasing project together, let's say me and Chris are in a project together. Well, I'm leveraging Chris's money and he's leveraging mine. And then we're all leveraging the time of, say, our third-party property management company, because I don't self-manage these properties. Built into our expense model is hiring a professional third-party property management company that's going to know 100,000 times more about managing an apartment community on a day-to-day basis than I ever would know. I wouldn't know what to do, but I work with great third-party property management companies that are total professionals, and we agree on a budget and a vision for the property, and then it's on them to go and carry that out. And if they're doing a great job, then we don't have a problem. And if they're not hitting the numbers, then we're going to have a conversation and have a talk, because we agreed on these numbers ahead of time. And what changes do we need to make working together? Or perhaps I make a change, as I've done several times in the past, to bring on a different management company. And fifth benefit of multifamily investing is control. When you invest in a stock, do you have an opportunity to go sit in on a board of directors meeting with the company whose stock you're buying and influence any of the decisions that are made? And I'm not really saying that as a passive investor, you can really influence the deal sponsors per se, but I will tell you where you have the control. You have the opportunity to often watch a webinar, a live webinar, when deal sponsors are promoting a project that you might have an opportunity to passively invest in. You have an opportunity to ask me or my other sponsors questions about that investment before you choose to invest. So there is an opportunity for control and interaction. And then obviously, if the deal sponsors are just dropping the ball and the property's not going well, there are provisions in every company agreement where a passive investor, could typically vote an asset manager out. I'm very fortunate to say that I've never, had that happen. I'm also very fortunate to say, as we move into some of the real world numbers, that I've never had an investor in 10 plus years lose money in any of my apartment investing projects. So with that, real quick, how are we doing on time, Chris? We good?
Yeah, we're doing really good.
Okay, awesome. Right. Let me just hit some real world numbers. So Chris mentioned, all told, I've been a partner, whether GP or an LP, in nearly 30 apartment deals, and 13 of those as a general partner over the years, 2,250 going on to 2,500 with the deal that's going to be closing here before the end of the year. And 9 of those deals have gone full cycle. So I'm only going to give you, and I just went through and calculated this again today, I'm only going to give you returns on actual deals that have closed. So what I did was I came up with the total return over whatever the ownership period might have been. And then by dividing and figuring out the actual ownership hold periods from those properties, which I said was an average of 3.5 years, I was able to come up with an average annualized total return on an annual basis. So that includes that cash flow during ownership and whatever we were able to realize on the back end, and then divide it out by the ownership period. And then I averaged that across all 9 properties. So my average return on my 9 projects was 111%. So that basically means that if an investor put in, let's just say, for example, $100,000, that within an average 3.5 year period, they gave me $100,000 to invest in the project, and 3.5 years later, I gave them back $211,000 in their pocket. So they were able to more than double their money in that time period. The average annualized return, when you looked at the cash flow and the value added that we realized on the back end, divided by the ownership time, came out to 38% a year. So 111% total return, 38% average annualized return. Again, no investor of mine in nearly 11 years has ever lost money in any of my projects. 7 of those projects hit, and many of them dramatically exceeded the projections to investors. One of them fell just short of the projections to investors, and the other one fell more short, but everybody still made money, and in the end, nobody lost money. And all told, like I said, even averaging those 2 that didn't hit projections, they were factored into that 111% and 38% average annualized return. So, some of you that look at other conventional investments, you're obviously not going to see, any returns like this in your typical conventional investments. Real pleased with that.
Hey, Aaron, just to
Yeah,
interrupt you briefly, there is a
sure.
question first from someone that has their hand up. I'll
Yeah.
turn it over to them, so that please take yourself off of mute, and Mr. Webb, and ask your question.
Hey, what's going on? I'm so glad I'm here tonight, and I'm thankful that I can hear both of you speak. And what you've done is like very admirable, and I very look up to it. I'm like 19, but this isn't about me. So I wanted to really know because I'm doing some research while you're talking, just where the economy's at. Mortgage rates just hit a 20-year high. So I want to know, like, what are you thinking in your mind? What is your plan? Because worst possible view, all right, like, we're de-dollarized and we all start using the Chinese yuan or whatever, right? That's an extreme view, obviously. Like, what's going on in your mind to prepare yourself for the upcoming events in the economy?
Well, again, not being, and I've gotten questions like this for the last 11 years, and that's a great question. And obviously, awesome on you for being 19 years old and even being on here to spend time with us tonight, and being so plugged in with economy and just reading. So great on you just to even be here to hear us speak and ask that question at 19 years old. So that's amazing, and I'm happy you're here too. So thanks. What we're really looking at is, I don't have a crystal ball. I don't know what's going to happen, and I'm never going to have all the answers. But I do know that right now, especially in Dallas-Fort Worth, where I do my projects largely, and I've also done one now in the Houston area as well. But I focus on places that have indicators that have economic growth and are anticipated to continue to have population growth, are landlord friendly and business friendly. And there's also in these places a large affordability gap between people being able to own homes, and obviously rising interest rates don't help anybody either in that regard. So people are going to need a place to live. So there's going to be a place for functional housing. There's going to be a need for apartments in the areas that we look in. So a great question, and at high level, I'm not going to have all of the economic answers to your questions because I just don't know exactly where things are going to go. But I'm going to bank on there continuing to be a need for apartments, and especially in these markets that have the indicators that we look for. And I'm going to continue to invest my money into these apartment markets. Chris, did you want to speak to that at all?
Yeah, I would just say very briefly, you hit it on the head there. When you look at investing in real assets that people need, like a roof over their head, like in these multifamily apartments, is certainly something that you want to consider for all of the benefits that that provides. And when you think about the markets changing, as you were mentioning, the people may quickly find themselves running away from those things that have a lesser value and finding other assets to place their money to preserve their wealth. And when you look at the historic trend lines of apartments in particular, you'll find that these have been historically a safe and secure place to not only preserve your wealth, but to grow it, as Aaron has been highlighting throughout the course of the presentation. So thank you.
Yeah, and like in Dallas Fort Worth, I'll just speak to this market being one of the top apartment markets. You know, it's competitive. People want to be here and people want to be investing in apartments in DFW because they see the need, they see why it's a favorable market. So when I'm accessing these opportunities, and it takes a while to build the relationships to where you even have access to acquire these types of properties, to where you can then bring them as prospective investment opportunities to passive investors and to meet the partners. So, you know, people want to be here, and I can tell you that DFW is people everywhere see the value in being in DFW multifamily. And that's not to say that Dallas Fort Worth is the only market, and there's probably others. I know that and Chris can probably speak to that, and probably often does in these meetup events. But that's what I've tried to do, and that's what I'm doing now, is forming more partnerships with other experienced GPs and sponsors to create more great investment opportunities like the ones that I've done in the last 10 plus years, but now be able to bring more ones to my passive investors for their investment consideration. And I get, that's a good question. I get questions like that all the time. I mean, I kind of lump them into, and I'm not saying it's a bad thing, but they're kind of like crystal ball questions, right? People want to know, like, with what's going on, and I've heard variations for the last 10 plus years. And you take the factors, you're never going to know it all about everything, right? So you try to identify several factors that will suggest that demand is going to continue here, and you move forward and you take action. And historically, that's served me well, as I just gave you some of the real world numbers that my investors have enjoyed on my projects. That's pretty much what I had to say, running through the benefits and then the historical numbers on my project. So yeah, we could open it up to a few more questions, or if you had something, Chris.
Yeah, so so first off, thank you. That awesome content, a lot of great education there for the community. I want to open it up to the group to ask their questions so that they can have a moment to pick your brain, and then after that I'll go ahead and ask mine before we close out. So group, take yourself off of mute if you are shy. Please go ahead. I see Ivy Moore has raised their hand.
Awesome.
Please
thank you. Hi, Aaron. Good to see you again. And thank you, Christopher, for putting this on. I was just curious, Aaron, what are your top 3 markets right now? And can you explain a little bit about why?
Sure. Hey, Ivy, how are you? I know Ivy through Brad Sumrock's group. So great to talk to you, Ivy, and I'm glad you're on here.
It's really good to hear you guys. So thank you.
Thank you for coming.
Yeah, and I think we even kind of chatted about this when I saw you at the AIM NatCon recently. But Brad gave his top 10 markets that he identifies every year, and he kind of asked us to pick kind of the 3 markets that we would like to be in. So actually I did this recently, and the reason's always going to be the reasons that I outlined before. It's going to be that they're landlord and business friendly, and they have those those indicators that we look for in terms of, you know, job growth, population growth, and economic growth. So you know, my number one market is Dallas Fort Worth. I've been here for 10 plus years. It's my backyard. I live here. I know the area. I have lots of broker relationships with the, you know, the top guys that are selling the apartment communities. I'm known by a lot of the sellers. So because of all of those reasons, and it's my own backyard, you know, Dallas is my number one market, Ivy. A market that I really like, and it's always going to be for the same reasons. But then often it's just like, hey, if I'm going to go visit an area, you know, one of the cool things about multifamily is you can go and write off these business trips and go travel to areas that you like, right? So if they happen to be top apartment markets and you enjoy being there, then that's another bonus too, because it's also about the lifestyle. And Chris, we can talk about that in a minute, but it's the lifestyle that apartment investing affords too. Because at the end of the day, I got in this business to build wealth, but be able to live life on my own terms while I was doing it. But another market I love, and I recently invested passively in a project there, is Nashville, Tennessee. And then another market is Tampa, Florida. And I don't think it's probably hard to figure out. All those markets hit all that criteria that I mentioned before in terms of all of those indicators. And then Nashville is just a great, fun town to visit. And it's always great to go to Sunshine State, right? So those are markets that I'd like to move into on the GP side as well. But there are many others as well. Those are just the ones that stand out. Those two, and then obviously continuing to be here in the DFW area, as well as other markets within Texas as well.
Great question. Thank you, Ivy, for that question. And the next question is from Tariq. Hi, Tariq. Thanks for joining.
Yes, hey Chris. Good evening, everyone. So I have a question. So I recently heard some advice that when it comes to real estate investing, the best time to start is now. So how would you recommend someone balance, let's say if they need a house right now for themselves or their family, they need a roof over their heads, right? How would you balance that need with the desire to get involved with real estate investing? Would you say it's smart to do both at the same time? Just wanted to see if you or Chris had any advice in that regard.
Well, are you talking about just the basic necessities to live and put a roof over your head? Obviously, that's always going to come first, if I understood the question correctly, Tariq.
Yes. So basically, just to summarize the question, for someone who needs a house right now, maybe they're looking into single family homes, they're looking into multi-family homes, but also they want to utilize some of their funds to invest in real estate and in some more of the passive investments. What would you recommend, they do in terms of that process, or getting started, but also needing something personally?
Yeah, I mean, I'll answer first, and then maybe Chris has, an answer as well. But I would just say to do whatever you can. I mean, yeah, get started and get started now. If you have to start smaller, everybody comes in at a different point, right? Financially, if you have to start smaller, getting started in a small way is 100 times better than not getting started at all. I've taken people passively into my deals for as little as $10,000. More often than not, people might passively invest at a level of like 50, 75, or $100,000, but I recognize that that's not where, everybody is. Obviously, you always need to take care of, the basic necessities of life first and foremost. But yeah, I mean, I would get started. I would also, go to events. It's not always about spending money. So, if you have limited capital to invest, you might want to put that to work. But it's also about going to events, like Chris said, and meeting people and talking with people. And you never know who that partner that you could meet is. And maybe they have access to more capital. And then maybe you're able to partner and do something with them with your sweat equity, and they have the ability to fund it. So through relationships that you build by being on events like this on a Thursday evening, and by going to other in-person events, you have the opportunity to meet more people and build those relationships. What would you say to that, Chris?
I think that was an awesome response, and I would add, and the and to that is, in terms of starting small, there are other strategies that exist in real estate investing too, right? There are things like house hacking. So if you're really anxious and maybe solving both of those opportunities that you were mentioning, the opportunity may be you find a duplex or you find a fourplex, and in that fourplex, through some awesome family first time home buyer programs, for example, you can get FHA loans or some of those types of things where you can invest. You can buy a fourplex, live in one of those units, rent out the other 3 units, and that the income from those 3 units is covering your living expenses plus putting a little cash flow in your property. And while that's taking place, you're also able to grow some equity in that, while the tenants that are living in the other 3 units are paying down the mortgage while you live rent free, is just another example to add on to what Aaron is saying. So there are many different ways. It's really about finding out which method works best for you. But there are a number of them out there, and like as Aaron mentioned, the last thing I'll say is just continuing to educate yourself, coming to these things, investing in these types of events of your time to learn about a new way of investing that you may not have been very familiar with, as well as other things are just great ways to be able to open your mind to think about things in ways that you hadn't considered before.
Thanks. Yeah, and one thing I'd like to share with everybody, Chris, and I don't know if there's a graphic or you can share it later, but just use my email address. If anybody that watched tonight, I know you're also going to send this out to your entire group and they might view it later. But if anybody is interested in connecting with me and having the opportunity to invest passively in some of my projects, such as I shared, the historical full cycle deals, the total return averaging out at 111%, meaning more than doubling your money every 3+ years. 38% average annualized cash flow. Obviously, those numbers are going to allow you to build wealth and create financial comfort and security and freedom for yourself. And that's just passively. Obviously, you can get involved and be more active in the business, but this is just maybe for busy professionals or just people to where real estate's not necessarily going to be their career, but they want to put their money in a vehicle and grow it faster than those conventional investments, as you spoke of in your intro, Chris, and really put the money to work and, earn returns that are going to allow them to actually build wealth and not just see a small return every year. So I'd love for you to share my email address with everybody, and then I would just encourage all of you to reach out to me one-on-one. We can connect there, and then I can add you to my real estate investor database, and that way when I have opportunities under contract that I'm bringing out to passive investors for their investment consideration, you would have the opportunity to review the information on that deal and consider making an investment with me as well.
And Aaron, I did just post your email in the chat for the community. When we send out the link to the recording, I'll also include your contact information. But there are a couple of other questions if you just have a couple of extra minutes here.
Sure.
The first question, the next person up is Ariel. So Ariel, please take yourself off of mute and ask your question.
Hi, first and foremost, thank you guys both for being here to teach us sort of like wealth building with apartment buildings. Really do appreciate the information. I just have a general question. For beginners, would you recommend starting in the market that you're currently in? For example, I'm in Philadelphia. I know there's plenty of opportunities in Philly, but if I were to see opportunities in other markets based on those key indicators that you sort of mentioned, but let's say it's across the country, what would be the right, or I guess recommended approach to your first market?
Are you talking about if you're actively looking to acquire and be a GP, or just investing passively with another sponsor like myself, Ariel?
I would say the former.
Okay, so you're actively looking to find your own project. Sometimes being in your backyard can be great for all the reasons. You're there, your boots on the ground, your market. Sometimes though, maybe a market isn't going to be a favorable market. And I can't really speak to Philadelphia because I don't know the Philadelphia market at all. But you would know it, and you would know if it's a favorable market. You know, but I do see and know people all of the time. I haven't really done it, but a lot of my friends that sponsor GP deals do, where they invest in other markets than the ones they live in for various reasons. So it certainly can be done. I think the key is having a good third-party property management company that's on the ground in whatever market that you're looking to move into, and they're willing to work with you and kind of be the boots on the ground. Or even better, maybe you have a partner that's going to, be in that real estate deal with you, as well in that particular market. So I would never first and foremost pick a market based on it just being your own backyard. I mean, it would have to meet all of those other indicators, first and foremost. And then you're going to want to have some help with some boots on the ground in that particular market, wherever it may be.
Okay, thank you.
Thank
Sure,
you,
Ariel. Thanks.
And Adam, you have a question. And please take yourself off of mute.
Oh, I just turned the video on. Well, you guys get to see my face then too. Hey, Aaron and Chris.
Hey,
thank
Adam.
you guys for putting this together. Aaron, you having just the different experiences and having your businesses and that type of thing. Do you invest in any other asset class? If not, what is, I guess, your main value proposition for it being multifamily over we'll say storage or retail, something like that?
Yeah. Okay. Good question. I'm pretty bullish on multifamily, Adam. I really park all of my money here, much like my mentor, Brad Sumrock. Some people might look at that as foolish, but it's kind of like you learn one thing really well. You've got one basket, but you're really educated in that basket, so you can mitigate your risk, and you know how to smartly invest within that basket in that market, and then you go all in on that. So I pretty much just put my investments into multifamily. And look, I wouldn't say that I'm aware of every different opportunity out there. I'm obviously aware of things like storage and stuff like that. And I have people reach out to me all of the time. I think one reason why I've been able to be successful, and maybe it's just the way that my mind works and other people's minds work differently and they're able to do it, but I need to be focused. I'm a follow one course until success kind of guy. And when I got into this business, I decided this is the business that I'm going to be in for the rest of my life. It afforded me, like I said, the opportunity to build wealth and to enjoy it while I was leveraging systems and teams, so I can travel when I want to, and I can run my business when I'm in, let's say, Hawaii or whatever. And so I'm able to do all those things. But of course, I've had over the years people reach out to me about all kinds of different investments. I've never done, ground up multifamily. People are building, there's storage, there's other things. And I have people reach out to me all of the time. And usually I answer with some variation of, I might be an idiot and I might be missing out on a great opportunity. But the way my mind works is to not get distracted, just continue to focus on what I know. It served me very well. And, if I miss out on, something that would have been lucrative, then, so be it. I'm good over here. I have peace of mind. And I like to simplify and kind of streamline my life, and build, grow while I'm enjoying it and not bringing additional stress into my life. So that's just the way my mind works. And I'm a simple guy. So not knocking anybody that does any of those things. And I know people make a lot of money in those different things. But for me, since 2011, it's just been right down the fairway with, 1960s to 2000 construction multifamily properties.
So you found that your streamlined focus has allowed you to become more of a master in that, and it's proven much better for you than because I'm sure you get people coming to you all the time with different opportunities, but you staying focused on that one has allowed you to kind of hone your craft in and really know that in and out and maximize that to its most extent.
You said it better than I could there, Adam. Yep. Thanks. Okay. Appreciate it.
thank you guys for your time and your knowledge. Appreciate it.
Thanks, Adam. Yeah, thanks for joining us tonight. You have anything in closing, Chris? Did you have any questions
Yeah,
for me?
so just in questions, I have two questions for you that I like to ask all of our guest speakers, and I really just again want to thank you for taking the time out. But let me put you in the hot seat with two key questions that I like to ask, and maybe they're not so hot. But the first question for you, Aaron, that I have is, what does financial freedom mean to you?
Wow, that's a great question, Chris. Really, for me, it's just about living life on my own terms. That's a phrase I know. It's the ability to go where I want to go, when I want to do it, and do what I want to do with who I want to do it with. It's just that freedom. And like I said, because multifamily allows me to do both at the same time. It's not spending all your time and energy building the wealth, maybe like in the way my dad had to when he was starting those businesses, working 7 days a week. He was growing it, but he didn't have any time to enjoy it. I picked multifamily as a vehicle because it was going to allow me to enjoy it while I was building it. And I'm still building it while I'm enjoying it. And if people send me a Facebook friend request and then a message letting me know they saw me here, and then I accept the friend request, they're going to get to see how I balance. And that's what it's all about for me. There's a lot of things I love about real estate investing. There's things that I don't love about real estate investing. But overall, what I love is what real estate investing affords me to do, which is to live my life the way that I want to live it. So real estate investing is not my life. That might be a surprise, sometimes for many real estate investors, it is their life. For me, it isn't my life, but it's a large part of my life that affords me the ability to live my life the way that I want to live it. So that's what financial freedom means to me.
Awesome. And then my final question that I have for you is, I know I love to travel, and I know you love to travel, and I have the pleasure and the privilege to be in your friend network, especially on Facebook, and see some of the great escapades that you've had. Maybe you can share with the community here about what is one of the best trips that you've ever taken, and why is that?
Well, boy, there's a lot. I love to travel, lots of different kinds of trips. I guess just a recent example pops into my mind. My wife and I have two daughters, 130, 127. The 27-year-old we have a grandchild that is going to be one coming up this Tuesday, the 18th of October. We're going to be going to her first birthday party this Saturday here in the Dallas area. So we knew we were going to have a really great year. And I just said, we have the opportunity to just kind of go on a blowout luxury vacation and take everybody on a week that both of our daughters and their significant others and our granddaughter, they're not going to be able to afford something like this on our own. So just in August, we were able to take everybody to Maui, and we spent a week at the Four Seasons in Maui, and we just had a blast doing all kinds of things because, at the end of the day, on this, you notice I didn't really focus on, my own net worth and where my own wealth went. I wanted to put the focus more on what I've been able to do and create for my investors. So I gave the returns that my investors have returned. Because if I'm just going to tell you about, how much I've made, that doesn't really help anybody else out. And I'm happy to share those numbers and sometimes do. But, for me, it's more about what I can do for my investors. And it's also about not just wealth for wealth's sake, but wealth for the sake of creating memories and experiences, as well as obviously financial security so that we can live life comfortably for the rest of our lives. But it's more about being able to continue to create those memories and have those experiences with family, friends, and loved ones, because, that's what makes, life worth living. It's not just about acquiring another apartment community for the sake of, the acquisition or the ego stroke that you get from acquiring another apartment community. It's about, being able to help out people, your passive investors, to help them achieve their financial goals while you're achieving yours. And then that affords me the ability to create the life that I want and having those memories and experiences with the people that I love and that I care about. So that's, that's what it's all about for me. And while we're all doing that, we're providing safe and functional housing for our residents to live in and great communities for them to live in, as well. So it's, all good all the way around.
Awesome stuff. Awesome. On that last point, I like to say you're doing good while also doing well. So great point. Great stuff. Well, look, I'm going to say just thank you one last time for you giving us extra time this evening, and for sharing your insights and your expertise with the community around how they can go about building their wealth through apartment building investing. Aaron, I want to thank you again for providing your time, for the connection, for the friendship. I'm going to stop the recording now and allow anyone